In the world of investing, finding the next blue chip stock before it becomes a household name is the ultimate goal. These are the companies on the cusp of market leadership, the rising stars in a stable and thriving economy. Today, we're turning our focus to the Singapore market, a hub of financial strength and innovation. We'll be taking a deep dive into 5 specific companies that are currently on the reserve list for the prestigious Straits Times Index. These are the top contenders, poised to join the ranks of Singapore's elite stocks in 2025. What makes them stand out? And more importantly, what are the risks and rewards for potential investors? Disclaimer: this video is created purely for educational purposes only. It is not financial advice and should not be considered as a recommendation to buy, sell, or hold any investment. Please conduct your own research or consult a licensed financial advisor before making investment decisions. To understand the potential of these companies, we first need to look at the bigger picture for 2025. The global economic climate is shifting. After a period of aggressive rate hikes, the U.S. Federal Reserve has begun to ease its monetary policy. This has a direct impact on Singapore. As interest rates decline, borrowing becomes cheaper. This is a significant tailwind for sectors like real estate investment trusts, or REITs, which rely on debt to expand their property portfolios. At the same time, the banking sector, which benefited from high interest rates, is now facing some pressure on its profit margins. We're seeing a rotation of capital, a shift in investor focus towards more rate-sensitive and defensive sectors. With that in mind, let's turn our focus to the 5 companies on the STI reserve list as of late 2025. These are, in order of their potential to be included in the index: Keppel REIT, Netlink NBN Trust, Suntec REIT, Olam Group, and Yangzijiang Financial Holding. Our analysis has assigned each a quality score out of 100 based on financial strength, dividend quality, and blue chip probability. So let's count down from number 5. Coming in at number 5 with a quality score of 68 out of 100 is Netlink NBN Trust, SGX CJLU. Netlink operates Singapore's national broadband network. This gives it an incredible infrastructure monopoly. It offers the highest dividend yield of the group at a very attractive 5.6%. However, there are significant concerns. The company's payout ratio is over 200%, which is unsustainable. This means it's paying out more in dividends than it's earning. On top of that, it has negative free cash flow. This creates a high probability of a dividend cut within the next 12 to 18 months. While this stable, regulated business model is appealing, the risk to the dividend is a major red flag. At number 4, we have Suntec REIT, with a quality score of 71. Suntec REIT is a recovery story. It owns a diversified portfolio of properties, including the iconic Suntec City in Singapore. The REIT is showing signs of operational improvements and is benefiting from declining financing costs. It offers a respectable 4.8% dividend yield, which is well covered by its cash flow. The main challenge for Suntec REIT is the recent loss of a favorable tax status in Australia, which will create a drag on its distributions. With a market cap of 3.3 billion Singapore dollars, it's also the smallest of the 5, meaning it has a longer road to STI inclusion. Our third-ranked candidate is Olam Group, scoring 74 out of 100. Olam is a fascinating turnaround story. This agri-business giant is in the middle of a major strategic transformation, selling off a large part of its Olam Agri division to reduce debt. This move is intended to deleverage its balance sheet and allow it to focus on its higher-growth food ingredient segments. The early signs are promising, with a huge surge in profits in the first half of 2025. The company offers a 5.1% dividend yield. However, the risks here are still elevated. The company has a high gearing ratio and negative free cash flow, making it reliant on asset sales to fund its dividend. This is one for growth-oriented income investors who are willing to accept a higher level of risk. In the number 2 spot is Keppel REIT, with a strong quality score of 78. Keppel REIT is considered the highest probability candidate for STI inclusion in the near term. It has a large market capitalization of 4 billion Singapore dollars and an impressive 18-year history of uninterrupted dividends. Its portfolio consists of prime commercial properties in Singapore and other key Asian cities. The declining interest rate environment is a direct benefit, as its financing costs are among the lowest of its peers. It offers a solid 5.6% dividend yield. The one temporary concern is a payout ratio that is currently over 100% due to some fee structure changes, but this is expected to normalize. And finally, our top-ranked future blue-chip candidate with a quality score of 82 out of 100 is Yangzijiang Financial Holding, SGX YF8. This company stands out for its fortress-like balance sheet. It has almost zero debt and over 1.4 billion Singapore dollars in cash. Spun off from a shipbuilding giant, it now operates as an investment holding company with a diversified portfolio. Its profitability is exceptional, with a return on equity of 7.7%. While its dividend yield is the lowest of the group at 2.9%, it is growing rapidly and is extremely well covered, with a payout ratio of just 37%. This gives it ample room for future dividend increases. Its valuation is also the most attractive of the 5, trading at a significant discount to its book value. So, to summarize what we've learned, each of these 5 companies offers a unique proposition. Netlink Trust offers a high yield but comes with a high risk of a dividend cut. Suntec REIT is a steady recovery play. Olam Group presents a high-risk, high-reward turnaround opportunity. Keppel REIT is the most likely near-term candidate to join the STI, offering a stable and attractive income. And Yangzijiang Financial Holding emerges as the highest quality candidate overall, with a powerful combination of financial strength, profitability, and dividend sustainability. For investors, the choice depends on their risk appetite. Whether you're a conservative income seeker, a balanced investor, or looking for opportunistic value, this list of future blue chips offers compelling food for thought in the dynamic Singapore market of 2025. We hope this analysis has provided you with valuable insights. If you found this video helpful, please give it a thumbs up, share it with others who might be interested, and subscribe to our channel for more in-depth financial content. Thank you for watching.